Can you see my screen, guys? Can somebody just confirm?
Yeah, we can.
Okay, nice. So yeah, we will take a look about the opportunities we had last week, and we will look at we'll do a markup, markup and outlook for the next week. And yeah, so we'll start playing with the replay tool a little bit. We'll look at the last week, the opportunities we could have possibly had, and yeah, we will look at the market for next week also. Okay, so yeah, let's start. Monday is 18th. Okay, so what can we see here? Before we open the week, we can see that we're putting in very structure. So yeah, by the way, guys, I only trade GU, so yeah, I will do a review on GU, and if somebody wants me to look at AU or something else after that, yeah, just let me know and I'll do the analysis. Also, if you have any questions, be sure to stop me or ask in the chat, and yeah, I will reply. Okay, so yeah, we can see that the structure was pretty bearish, and yeah, we were doing the lower high, lower low, lower high, lower low, lower high, lower low. And yeah, what can we see? The Monday, when we open Monday, so yeah, let's go on the lower time frames. So yeah, what can we see? That this right here is our weekly open, right? And we open our week here. You can see as soon as we open the week how structure started going up with a lot of momentum. So yeah, they didn't manipulate the weekly open, the daily open. This is the weekly open. I'll talk about that in a sec. But yeah, the weekly open was just ran straight through. They didn't go to the downside to manipulate it, then go to the upside. So yeah, there was a lot of momentum to the upside, as we can see here. So yeah, this was our first intention that we are changing structure, that we are possibly starting to go to the upside. So what was I looking here? I was looking at this for our supply area. This was a good supply area. It had a nice leg out. We broke structure here and we broke structure here, but this is the main point we broke, right? And as we can see here, the price came in our supply zone. So yeah, I missed I didn't want to enter aggressively on the 50%. I was looking at the chart at that time. I was looking at the 50-minute, but as we can see, we left a 50% body candle, but the price just continued going down. So yeah, I was looking at the barrier. Every time that we make a push into a supply or demand zone, we will leave a barrier behind. And yeah, I seen this order block, and yeah, I see this order block. Now the first one, I was looking at it like a liquidity, like an inducement OP, fake OB, however you want to call it. And this one was much better to me because yeah, it was in the origin of the move. It also had a nice leg out, a nice break of structure. It had a nice order flow, so yeah, it was part of some kind of order flow. And yeah, this order block down here was much more valid to me than this one. But still, what happened, I took a buy position, kind of aggressive buy position, and yeah, the price stopped me out on this first trade. This was my first trade during the week. So yeah, I started the week but with the stop loss, but yeah, it doesn't matter. It was a 0.5 loss, and yeah, I recovered it like pretty much instantly. I will show you. So yeah, what was happening? Yeah, the price was playing around my stop loss, as we can see. And yeah, here, this is my mistake, I make a break of structure here, and I should go at break even now, but yeah, I didn't go break even. Yeah, I sometimes also make mistakes, guys, and yeah, the price go back, and yeah, it stopped me out right here. So yeah, there was something that I missed. I knew there was something more to this analysis. There was probably something underneath me that I didn't see. So yeah, I went again back on the higher time frame and I see, okay, so this 30-minute order block was already mitigated. We had another better order block, 50% body candle underneath us that wasn't mitigated. Okay, so I missed something. You always must look where did you make your mistake, you know? You always must look at that stuff. That will make you much better trader, because many people, you know, when they get a stop loss, they just turn off the chart and, you know, go away. They don't go back and review what did they do wrong. Or even when you have a good trade, you can always look what can I did better. You know, sometimes you partial too early, you know. You can hold your trades for longer. You know, there's some basic things, you know. You can always be better as a trader. So yeah, this is what I was looking at. I was looking at the 1 minute when the price stopped me out, and yeah, I knew we had an unmitigated demand area underneath us. And what I see here, so was a build up. We can see we build liquidity right here, and we have a move through that picks the liquidity on the one side, so picks up some sell side liquidity. And when we pick up the sell side liquidity, so we clean liquidity and we have a good leg out, right? This is a good leg out, and we break structure here, and we destroy some demand. So yeah, we pretty much, some demand area loses control. We flip demand area, whatever you want to call it, flip, destroyed, whatever. So yeah, we ran through the demand, make a new lower low. And what can you see here, guys, in this down move? You can see a series of order blocks, and all these order blocks are kind of a body candle, you know. These are kind of body candles. So yeah, what I was looking here, I see all these order blocks, and this was the most interesting order block to me. Why? Because it was the most valid body candle of these soles. It was a really small body and wick on the both sides. You see this one not so good, this one kind of big body, this one there's only wick on one side. So yeah, also here's another one right here. So yeah, you can see a series of order blocks, and yeah, this was the last one. It also can have this order block, like a fake one, or this one, however you want to call it. It had nice inducement for it. It also, this order block also really good. Why? We took some liquidity, we leave a 50% body candle with a nice leg out that breaks some structure and flips some demand area. So this is a strong supply area in my opinion, you know. So what was I looking at here? I was looking at the price action, and yeah, I see this. I see equal highs right underneath my zone. And yeah, this is when things start to be really interesting. Why? Because we started building liquidity now below our zone. That is another confirmation that this is a valid supply area. And yeah, we should look at how to enter on the 50%. Why? I usually don't enter if it's order blocks underneath 50 minutes, like 5 minute, 3 minute, 1 minute, I enter on open. This one is on 1 minute, but it's a perfect 50% body candle, and if it's a perfect 50% body candle, I enter on the 50%. I don't care what time frame it is. So yeah, I literally put my limit when I see we started building liquidity underneath my zone. Yeah, this was a really small stop loss. I was pretty much manually managing this trade because you never know, it can just have a little wick and yeah, stop you out and go in your direction. So yeah, this was my second trade of the week, but first take profit yeah, that I had. So yeah, we can see how the price tap us in. Okay, it didn't tap us in, almost taps us in. Yeah, it taps us in now, taps us in perfectly. And yeah, we can see that we just start going to the downside. And yeah, when we break this structure, I put my stop loss at break even. And yeah, what can we see here? The price just continue melting down. Okay, so yeah, that's that's the first take profit and the second trade I had of this week. And yeah, pretty much I got stopped out on the barrier, and yeah, I missed something in my analysis. I missed the body candle underneath it. So yeah, you must be really careful and be like 100% focused when you like when you trade, even when you do your markups, and you know, anything you do in life, you must be 100% focused. That's the thing. So yeah, if you look at the price action on the higher time frame, this was the night already. So yeah, this was new day. Okay, so what can we see? We wait for the Asia session to finish and the London session to open. Okay, so what can we see here is that we're starting to go underneath this 30-minute body candle. Why? Because there's a big imbalance right here. So this is a big imbalance. You can see the price. Just look at the price, guys. Before that, you can see all imbalance filled. You can see they fill it. Little to no imbalance was left behind. You see the price was really efficient. You can see efficient price action. You can see even if they leave some imbalance, they come and fill it almost instantly. And yeah, you can see that they've really pushed the price with momentum here, and they left a big chunk of imbalance here. So yeah, that's why they go to underneath the order block, because imbalances are really powerful. If the price is like this, really efficient, and then leaves a big chunk of imbalance, yeah, you should always look at imbalance because they are really strong. And yeah, what can we see here is, yeah, we react to the imbalance, and when we react to the imbalance, the price makes a new leg out. Okay, so what can we see here right now is that we take this high. And what is this high? This high is a last week high. So you see 8th of July, and this was like 11. So yeah, this was the last week high. And yeah, we can see when we take the liquidity from the last week, what we do, we start changing structure. Okay, you can see we take the last week high, and we also take this liquidity point here. So yeah, and this was a small liquidation right here above this high. But yeah, you can see we have a nice liquidity taken, so liquidity grab, and now we make a leg out. We make a kind of a leg out. Okay, so yeah, what can you look at here, guys, is pretty much an aggressive entry. When you take the last week highs and you change from bullish to bearish, yeah, like a change of character, something like that, however you wanna call it, this is when I like to take my aggressive entries sometime. Yeah, I usually look at the 50% of this body candle, but also what I like to do, if I'm looking at the supply area, I refine my body candle into this wick right here, and then I look to the 50% of that wick, because this was the last liquidity taken wick, right? The last leg out that broke our structure here. So yeah, I didn't have this trade, but yeah, this was also a good trade that you could look to take. And yeah, we can see the price has a perfect tap into our 50% of our supply area. And yeah, what can we look to target? Okay, pretty simple, guys. If we enter right here, you can see this leg out. But what's funny with this leg out, yeah, people look at this, okay, this was a break of structure here, I have a demand body candle right here, I wait for the pullback and enter. But you must understand, this high created this low, we ran this high, so probably we will run this low. Why? Because there's a big imbalance again underneath you. You can see the efficiency in the price action, imbalance here. So yeah, you can see the price efficiency, no imbalance, no imbalance, imbalance, imbalance. So yeah, they will probably go for that imbalances and go for some liquidity and mitigation. So yeah, you must understand that this is not a valid break of structure. and a lot. This is a liquidity grab. You see how the wick only closed. It's not a body close above us, it's a wick close, you know. And a lot of people will look at this demand, but we know that this is just a liquidity point for us now, and we will look at this demand underneath us. Why? Because because it's much more valid than this demand here. It has a big imbalance. You can see, guys, this is a big imbalance. Also, it has a inducement fake order block. This is a fake order block, right? And also this 4-hour order block is in line with the daily imbalance, with the 50% of the daily imbalance. You see, this is the daily imbalance, and this order block is in line with the 50% of the daily imbalance, guys. So yeah, this is a really powerful order block. And also, if we look at this order block, and yeah, we use our volume profile fixed range, we can see that the point of control is here. So a 50% body candle has a nice leg out, break of structure, imbalance, liquidity inducement. These are really powerful order block, guys. So yeah, you can pretty much look to target this low or look to target around 50% of this order block right here. And yeah, this is, in my opinion, a good entry. So yeah, this can be our target for this trade. So what will we do now? We will go on the lower time frames and yeah, look at the price section. So yeah, we see pretty much this was a 6 a.m. so this was still part of the Asia. So pretty much I don't trade Asia. I wouldn't take this trade, but yeah, if you have a good story behind your trade, and yeah, you should take your trades, but be careful if you're trading the Asia session. Yeah, don't take trades that don't make sense. And yeah, definitely if you're trading inside the Asia session, you want to be really careful. But still, if you have a good setup, if you have a good story behind your trade, yeah, this is still a solid setup in my opinion. But yeah, I wouldn't take it because it's Asia. So what can we see here? We can see that day no special trades in my opinion inside here. So yeah, we can see a new Asia session forming. Okay, beautiful. So I want to show you something, guys. People look at the daily cycle from AMD perspective, accumulation, manipulation, distribution. This is also one way that I look at the daily cycle, and I'll show you right here. I take the candle, you can go on the 5-minute, 1 hour, or even the daily. It needs to be the 23, it's like 11 p.m. my time, so it's the candle, it's a daily open candle, and you wanna literally mark the open. And what you wanna do, okay, so what you wanna do with this kind of daily cycle is, okay, let me drop on the lower time frame, is look at the daily open and look at the price action around that daily open. So you see, this is our daily open, and what can we see? The price, oops, let me go back. So yeah, the price usually manipulates one side of the daily open and breaks structure on the other side. Okay, so how do you trade the daily open? Okay, you wait. Okay, so you watch now. Okay, we take the Asian high. Okay, we start making push to the sun, and you're like now, okay, this can be the manipulation maybe, but you don't know. The only way you will know is when you make that break of structure, like here. You see, you can guess, okay, this might be the manipulation, but until you make this push to the downside that breaks structure, you cannot say this point and this point. You see, this is the main point that we broke. You see, so where's the manipulation? This was the manipulation, and this was the break of structure with momentum. Okay, so this is really important to understand, guys. This is one of the really good ways to look at the daily cycle. And now you can see how our daily cycle, the accumulation, manipulation, distribution, the AMD model inlines, so they inline together with the daily open. So it's like a double confirmation. You can look at those both, and when they both align together, those are really powerful things. So like this order block right here. This order block, why is so good? because it took some liquidity. It took Asian high, and then when we took liquidity, we had a nice leg out that broke structure here, 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 right? We have a nice momentum push to the downside, okay? And also this order block was the manipulation on the top side. If we want to go to the downside, we will manipulate the top side of the daily open. If we want to go to the upside, we will manipulate the bottom. So yeah, if we're going up, you will see a manipulation on the top side, break to the downside. And what are you waiting for now? So yeah, pretty much you're waiting now for the price to pull back in your POI, okay? Let me turn off the Asian session. So yeah, this is a good order block. As I said, 50% body candle, took liquidity, breaks some structure. It aligns with our daily cycle, with our AMD model, however you wanna call it. And yeah, this is a good order block in my opinion. So, whoops, I overplayed the price, my bad guys. So yeah, what can we see here is that we hit the 50% perfectly and we react from the 50%, right? Okay, so what can what can we do now? Yeah, we can literally take a first entry aggressively on the 50%. Why? Because we have a good story behind our trade. Yeah, we have a good story behind our trade. It's yeah, some people will go, okay, look at the lower time frame for confirmation. Yeah, it's okay, go at the lower time frame, look for the confirmation, but sometimes it's okay to even have a risk entry like this. And yeah, we will target 50% right here of this demand area. And yeah, what do we look at here is that okay, we have 10 minutes left. I will send in another Zoom link, don't worry. And yeah, what can we see here? We react, and yeah, this is the first entry that we take. But if we miss the risk entry, you see guys, if you look at here, even if we go on the 1 minute, we can see much better what we do. We come in our POI, we take some liquidity, we mitigate the 50%, and when we mitigate the 50%, we make a push to the downside, a leg out that breaks some structure right here, okay? So if you look at the 1 minute, you don't have any order block, so you must be flexible, guys. You always must look around time frames to find a good order block. You see on the 3 minute we have a good supply area, and yeah, this is a double M entry. You already mitigate the higher time frame order block and you leave a lower time frame order block. So yeah, this is a really good entry in my opinion. And yeah, this is a more secure entry than the first one. And also you can same target 50% right here. And yeah, this is a really good trade in my opinion. Okay, let's play the price. Perfect tap in and perfect move into our direction. Okay, so what can we see here? Okay, nice. We can see here that we now hit the 50% of this 4-hour demand area. That was our target for our sell positions. Okay, what can we see now? Just move this to the side. Okay, we can see we hit the 50%. Okay, we now hit 50% again, and we make a push to the upside. Okay, so let me just play. Okay, we close with body above. Okay, this is good. So what is interesting, we make a reaction on the 50% of the higher time frame demand area. We break the lower time frame supply area, so we flip this supply area, supply loses control. And what we want to do, we want to find the demand area that caused us to flip the supply area. So yeah, this is our demand area that caused us to flip this supply area. And yeah, this order block is a good order block. It's still a kind of a double M entry. In my opinion, it has a solid leg out. Okay, break of structure. We destroy some demand. Okay, nice. But this order block is not a good 50% body candle, and it's a 3-minute order block. So yeah, these kind of order blocks, I usually look to enter at the open on them. And yeah, I would enter at the open here. And what would I target? Yeah, and as we can look, okay, what can we target now, guys? Let me delete this. Okay, we can clearly see we have liquidity forming right here. You see, this is liquidity. 1 touch, 2 touch, 3, 4. Okay, a lot of retail traders are looking this as a resistance level, and yeah, they're putting their stop losses above this area. You must understand that. Why? Because the retail traders, they like to trade the resistance when the price comes to some zone, and yeah, it rejects multiple times. That is a good zone for them, totally opposite of the supply and demand. They like their zones to be mitigated multiple times, and then they will enter, but that is not good. So yeah, what can we look here is this liquidity right here, or we can look target above that liquidity. Why? Because above that liquidity on the 1 hour we have an order block that has still not been mitigated on the 50%. But yeah, what you must understand, guys, look, when I tell you, you see, we close with VIX above. Look at this below here. Also, we close with VIX below. So yeah, it's not a body close, and yeah, they just pick up the sell side liquidity, they go for the buy side liquidity. Buy stops, sell stops, however you want to call it. Yeah, they run them both, and yeah, people will now look at this. Okay, they will put their limits here. Retail traders have resistance, they put their stop losses above here. Also the smart money traders see, okay, we have a change of character here, demand looks like flipped. Okay, this is our supply area, we enter here, but that is not correct. Why? Because they don't understand the concept of liquidity and how the liquidity is generated, and that is really important, guys. You must look, did we close with body, did we close with a candle? You must be flexible, you always must go around the time frames, never be stuck on one time frame. It is really important. So yeah, let me go back. The 5 minute, 3 minute, my bad. So yeah, the entry we can look to take here is this, and target the 50% of this order block. So yeah, pretty much this is an entry that looks solid in my opinion. This is also 5 minute 50% body candle, but yeah, it's a 3 minute. We'll take a 3 minute because yeah, it's a sell candle. This one was a buy candle, and yeah, we can see how we get just a perfect tap on the open and the price starts moving in our direction. Okay, so the third trade I took this week was in this area right here. So yeah, what was I looking at is that yeah, we have left shoulder, we have head, and we start creating the right shoulder. So yeah, I see a lot of retail traders are trying to short, and as I said, if they're trying to short this resistance where their stop losses, they are above. So yeah, I know the possible liquidity target and also the unmitigated zones, and liquidity acts like a magnet for the price. The price, they pull the price to them, like a magnet. They just want to go and take the liquidity, mitigate the order blocks, fill the imbalances. They are like magnets for the price. So yeah, what can we see here pretty much is that let me go in a little bit. I was looking at the smaller time frame right here. Why? Because when I look at the 15 minute, I saw that we had an order block right here, a 50% body candle, and the price did not mitigate the 50% of that order block. So yeah, I was looking at the lower time frame right here, and what I saw was that we had a nice leg out that broke some structure here, and we leave a body candle. And yeah, what was interesting in here, let me go in. So yeah, I marked this break of structure, and this is our leg out, and this is our order block, our body candle that caused us to make a new higher high. So yeah, what I saw here was, what's wrong? Let's see, something's wrong with trading view. Yeah, what we see here is that let me play. We mitigate the open, but the 50% was still not mitigated, and this is when things started to be interesting for me. Why? Because I know that all of the orders are at the 50%, and yeah, they didn't mitigate the 50%, and they're making a head and shoulders pattern, you know, the sell and head and shoulders. So yeah, I know that a lot of retail traders are trying to sell the market, and also what I see here, this was a bigger head and shoulders, right? The left, the head, the right shoulder, but inside here we were making another head and shoulders pattern, guys, right? You see another left shoulder. Yeah, the Zoom will end. I will send another meeting in a second. We have less than 1 minute. So yeah, right shoulder. Let's just end, and I will send another link. Yeah, let's wait for the other guys to join up. There were like 2 more people, something like that. My G. Yeah, let's wait a minute or two more and yeah, we'll continue. Okay guys, so as I was saying right here, so yeah, we had this 15-minute unmitigated 50% body candle. Also we had left shoulder, head, right shoulder. Inside of the bigger head and shoulders we had a smaller head and shoulder schematic playing out. So yeah, this was really interesting to me, because a lot of people were trying to short the market. They were putting their stop losses right above here, and yeah, I was really looking at the way how can I get involved into the long position. So yeah, I was looking at a smaller time frame. I seen this nice leg out with a break of structure, and I also see that we mitigate the open, but the 50% was still not mitigated. So yeah, I was really interested to look at the 50% of this order block, and also I was looking at the indicator at the same time. So yeah, what I see right here is that when we mitigate the open, we hit the equilibrium, and yeah, we make a push reaction to the upside. But the 50% was still not mitigated. So yeah, what was I interested was in the 50% to be mitigated. So I was waiting and looking how I can get involved. So what I see is we play the price at the same time. When we hit the 50%, at the same time we hit the mid lane, and also if we look at here, we're making a higher low. The structure is making a higher low, but the indicator is showing us from this low to this, it's a lower low, but we can clearly see it's a higher low. So we're having an AVD plus SVE entry, strong. So we're having an algorithmic vector divergence, and we're having a strong vector entry at the same time. So that's another two confirmation for us that we should enter on this trade. Okay, so yeah, I pretty much enter. It was due to the slippage. I had a limit on the 50%, but I got triggered just a little bit below here. I think it was 475, something like that. And yeah, my stop loss was below this low. Now the mistake I made here was I was targeting the last point of structure. I should have targeted at least the 50% of this order block, or maybe the 50% of this order block, or maybe even target the high, but I target the last point of structure. That was my mistake. I should have held the trade for a bit longer, but the thing with this trade was I only risked 0.25%, and yeah, I didn't take any partials. It was just full TP trade, like no partials or anything. So yeah, what can we see here is that the price just wick me in perfectly, and when the price triggered me, it just started making the push to the upside. As soon as we break the barrier, I always look at the barrier. If I go into the demand area, I look at the supply which push me in. If I want to buy here, I want to put my break even as soon as I break the barrier. So this is what I did. I put the break even as soon as we broke the barrier. And what happens here? The price, I was thinking that the price will come and tap me out at this particular moment, but yeah, as we can see right here, the price just go down to mitigate something, they come down to mitigate this demand area, and yeah, when they mitigate the demand area, we can see they just continue to the upside. And yeah, this was a good trade for me. It was a hard TP, no partials taken, 7 risk to reward. But yeah, I could have get much more if I, let's say, targeted this high. Why? If you have a head and shoulders pattern, usually most of the stop losses will be above the high. So yeah, I should have targeted this high as a part of a liquidity point. That's my mistake. Next time I will not make that mistake. So yeah, happens. Even if you have a good trade, you can always have a better trade, guys. So yeah, think about in terms, yeah, I close my position here, but I could have it running for like 5-6 more percent, right? So yeah, you must be 5-6 more risk to reward, my bad. But yeah, must be really flexible when trading, and yeah, don't be like, okay, I'll take my partials right here. Yeah, because there's more chance than price. Yeah, just taking this liquidity and yeah, just straight turning around. Yeah, there is a chance, but always target the last high. Maybe I could have taken like 50% here, you know, that would be much better, and close my full position, you know, right here on the next high. But yeah, that's my bad. Yeah, shit happens. But yeah, this was a good solid trade still, in my opinion. Everything makes sense if you look from the lower time frames, higher time frames, and even the indicator was aligned. So yeah, everything must make sense when you trade, guys. And yeah, what can we see here? We pick the liquidity now, and what happens? Yeah, we make a reversal. So yeah, you must understand, guys, where is the most liquidity, very real. Everybody put their stop losses, you know. Now look at this. Let me delete this. And yeah, look at this. Now we have 1 touch, 2 touch, 3 touch. Imagine just how many people are putting their stop losses above here, how many liquidity is just stacking above. So yeah, what was I looking at here? Was this demand was this demand area right here. I overplayed the price a little bit, but yeah, I will go back, no worries. So yeah, what I overplayed here, let me play the price again. Oh, I didn't overplay nothing, my bad, guys. So yeah, what can we see here? We had this New York high, and we have this New York low. This high was created at 2 p.m, this low at 3 p.m. So yeah, these were both New York low and New York high. But what's interesting, the New York low mitigated something, took some liquidity, and made a leg out. This was really interesting. Why? Because we broke the New York high. What does that mean? When we have season highs and season lows, if season lows hold, that means continuation, or season highs. If the season highs or lows get broken, that means reversal. In this case, we broke our season high, so that means probably that we are pushing to the upside and the momentum is to the upside, right? So yeah, we have a nice liquidity grab, a nice leg out that broke our structure, and we have a order block right here. This is a 30-minute order block. So yeah, the first trade that you could look right here is this demand area. So yeah, look at the Asia session, and what can we see? Okay, we can see that we oops, okay, I didn't overplay the price, but yeah, we can see that we take the Asia session low, right? So we make a manipulation below. I don't know if this was Asia.1, something like that. Yeah, this was 1 times Asia season. This is pretty much 1 times the Asia season, as we can see here. And yeah, we reacted the 1 time of the Asia season, and yeah, we reacted the 50% of this demand area, and we make a leg out. Also, what we do when we mitigate this order block, we leave a new order block, a new 50% body candle. And yeah, this is the double M entry, right? So we have a new order block that is part of the order flow, right? And what can we look to do here is take an entry on the 50% here and look to target the 50% maybe of this supply of this supply area right here, or maybe target the last high. But yeah, this was where the most liquidity is, so yeah, you should target above this area right here. So yeah, this was the trade that I missed. So yeah, I was looking at how can I get involved. Whoops, I definitely overplayed the price right here. So yeah, I was looking how I can get involved on the lower time frames because again I overplayed the price. Just one candle. I was looking how I can get involved because I missed this perfect double M entry, and yeah, I was looking at the lower time frames. I was looking at the 3 minutes, and yeah, what can we see here, guys, is that when we react to this order block, we started making order flow. You see, we make order block, then we make some kind of liquidity inducement. We take the liquidity, we mitigate the order block, we make a new leg out, we broke a supply area, so we know that the demand is in control. What can we else see? We can see that again we make a new leg out, we pull back, we mitigate the new body candle, and we make again a new leg out. So the order flow right here was really good. You see, the order flow is aligned. The higher time frame order flow aligns with the lower time frame order flow. So yeah, this was really interesting to me. And whoopsie, I was looking at the price right here. So what I see was, okay, we mitigate this order block and we leave a new order block. Also, we break this supply area. Okay, so we have a 5-minute, this was the order block I was looking at, this was a 5-minute 50% body candle with a nice leg out. It was part of the order flow. It broke some supply area, and yeah, we have a nice break of structure to the upside. So yeah, this was a good demand area in my opinion, and I was looking at the 50% of that demand area, and I was looking at the indicator. So yeah, what I saw was, yeah, we broke structure nice to the upside and we started pulling back. So what was I looking at? Play the price a little bit. I was looking at the indicator and the 50% of this demand area again. So what I saw here was that again, at the same time that we were reaching at the same time when we reached the 50%, we reach the equilibrium and the mid lane. This is a very strong vector entry. This is not only equilibrium or only mid line. At the same time, at the 50%, we reach the both things, the equilibrium and the midline. So yeah, this is a really strong vector entry. So yeah, the trade that I took yesterday was on this demand area right here, and I was targeting this high here. My bad, I wasn't targeting that high, I was targeting the daily open. So yeah, I have the daily open always in mind. Where's the daily open? 23.0. Okay, this was my daily open, and you can see when we opened the price that day, we were just going to the downside. So you can see the price didn't manipulate the top side of the daily open. So I know there was still a lot of liquidity above the daily open and above here. I should have targeted much higher, like this trade here, but yeah, I was targeting the daily open in this example. It was 6RR, something like that. Yeah, 6RR, and yeah, I had a perfect tap in. As I said, the higher time frame, the lower time frame, and the indicator were all aligned. You can see, guys, the higher time frame liquidity, the lower time frame confirmation entry and the indicator itself were all working together, and this is really nice to see. And also when we react here, same thing. As I said, always we have a barrier. As soon as we break the barrier, I put right now, this is like a nickel high. I didn't still put at this moment my break even. I waited for the close, candle close above, and yeah, this is where I put my break even, and we can see the price just started going to the upside right here, exploding. As I said, I maybe should have targeted a bit further up, but yeah, it still doesn't matter. It's okay trade in my opinion. Yeah, this one could have been 10 risk to reward, but I missed the first entry and I got the second one. So yeah, I in total had 4 trades this week, 1 stop loss, 3 take profits. Yeah, the first one was the stop loss, and yeah, pretty much that were some of the trades that you could have looked to take in this week. In my opinion, it was a really good week. There were really nice trades, but yeah, I think next week will be also pretty good. So yeah, let's look at the chart for the next week, and if somebody has any questions regarding these setups, yeah, be sure to ask me or write in the chat. Any questions? Hey buddy. Yes, it's all recorded. Yeah, I'm recording it at the moment. 52 minutes. Yep. No worries. Okay, so yeah, let's look at the market for next week. Yeah, we'll start with we'll just do a markup. Yeah, this is just a markup for next week. We'll start the weekly time frame, and yeah, we'll go from weekly to the lower time frames. Okay, so at the weekly time frame, what can we see? Yeah, we're going down, and yeah, the only thing I can see here that is interesting is this order block right here, and yeah, I'll mark it up, and yeah, that's pretty much all the stuff I see on the weekly chart right here that might be triggering to me. On the daily time frame, we can see that this order block can be refined to this 50% body candle. Also underneath we have a fair value gap, an imbalance, however you want to call it, inefficiency, fair value gap, imbalance, it's all the same. Yeah, it's right here. And also we have, my bad, so yeah, we have to look at the 50% of this order block, but it's pretty far. Keep in mind, it's pretty far away. It's like 300 pips, but yeah, this one right here is also a good order block. It's a kind of 50% body candle. Still, we're building some kind of liquidity. We're building some kind of liquidity just underneath it. So yeah, we should definitely look at the 50% of this. I'm not telling you, okay, when the price comes here, sell. No, look at the lower time frame, look at the daily cycle, and yeah, have everything in mind. Don't gamble, don't try to predict, react with what the price is giving you. So yeah, you must look at the daily cycle every day if you want to find the best trading opportunities. So yeah, what this order block is also good, also has small imbalance underneath it, and yeah, it's kind of a part of some kind of order flow. Yeah, it's part of some kind of order flow. But yeah, we'll look at this order block for next week on the daily time frame. Let's see on the lower time frames what can we find. 4 hours. Okay, on the 4 hour this looks really interesting. So yeah, let's put ourselves in the shoes of a retail trader. So what would a retail trader do here, guys? Do you know what would a retail trader do here? I'll tell you because I was a retail trader once. So yeah, the retail trader will see this. Okay, we have a left shoulder, right? We have a head and we have a right shoulder. Okay, so me as a retail trader, my retail instinct will turn on. Okay, now we'll start thinking. Okay, we have this high here. So what would I wait for? Is for this high to be broken and I will enter on the breakout. So this is my logic as a retail trader. I would have entered here and I would have been the part of the liquidity grab of the stop hunt, you see? That's how retail traders get trapped. So yeah, me as a retail trader, I see head and shoulders and I wait for the breakout and I enter on the retest, or I just enter at the breakout. So that was my logic as a retail trader. And yeah, many retail traders, what will they do here? Yeah, even if some of them got triggered, many of them, the buy stops were right above this high, the buy stops got triggered, as you can see, and yeah, they made a push to the downside. And yeah, there are a lot of retail traders that bought in right above here. And what they want to see is new higher prices. Okay, they have this and they think, okay, this is the next move. If we go this much down, when we have this head and shoulders, we must go here at least. That is their perspective. I say it's not impossible, but works once in 10 times, something like once in 100 times even. So yeah, you must keep in mind that what will the retail trader do? They will trap them probably, in my opinion, for next week. They will. I'm not predicting. Keep in mind, guys, I'm not predicting. I'm just telling you my opinion and what I think is possible to happen. So yeah, they will see that they will start buying in the breakout. You see, they will start buying in all the moves here. Why? Because they think the price is starting to break to the upside. And yeah, the price will hit the 50%. You know, they will make the reaction and they will start cleaning maybe everybody. And yeah, I've seen this happen so many times, and really, they're just waiting for this to break up. And yeah, the people that buy the breakout, the retail traders, they will have some profit. You know, they will start going into profit, and yeah, they will just get stopped out. I mean, that's what I think it will happen. As I said, I'm not predicting. I will react with what the price gives me. But if I'm just doing an outlook and looking at some scenarios and possibilities that can happen next week, I definitely think that this is one of them. Yeah, because if you just think like a retail trader, most of them will wait for the breakout and buy in on the breakout and probably get trapped into the wrong side of the market, you know. So yeah, we will look at the next week, and yeah, look at the daily cycle. We will look if the price comes here. We'll not enter immediately on the 50%. We'll wait for the reaction. Look at the Asian high. Look at if we broke some structure, and then wait for the pullback and enter at the pullback. And yeah, we'll trade like a professional trader and not like a retail trader. So yeah, sometimes you must look at from the retail perspective and institutional perspective to get the picture what can happen. Also, this can be a fake order block for this one. You never know. But yeah, at the moment, to me, it looks like this imbalance right here, and we're building liquidity and inverted head and shoulders, and retail traders will try to buy in, and yeah, we will see. We will definitely see the next week, guys. Also, we must keep in mind, if we know that we will have sells, probably we will have buys before sells. So where can we look for some buys for next week? Okay, we will look at our profile for volume profile control. Okay, what can we see here? If we pull out our volume profile, we can see this is the range. This is also the smaller range inside. You see, we take the buy side liquidity, we take the sell side liquidity, so we liquidate both sides, and we leave the 50% body candle. And this 50% body candle has a point of control on it, and it's a 4-hour 50% body candle. Those are strong candles. It's not mitigated on the 50%. And yeah, if we pull out our optimal trade entry, 1 second. Yeah, if we pull out our OTE right here, guys, what can we see? This is the optimal trade entry zone plus the point of control. So yeah, this is OTE plus POC, and yeah, we should definitely keep in mind the 50% of this body candle right here. There can be a nice reaction, and yeah, if the price wants to go to this supply area, we can probably see a nice push from this body candle, in my opinion. As I said, I'm not predicting, I will react with what the price gives me. If you look at the lower time frame, we have a solid break of structure right here. This was the BOS. Also, if we look at this for our demand area, we can refine it to the 1 hour body candle right here. Okay, and yeah, we can look at the 50%. We can still look at the 50% of the 4 hour. Why? It's because it's lower than the 50% of this one. You see, this one is kind of higher. We should still look at the 50% of the lower, but maybe put stop loss still underneath this one. Maybe, I'm not predicting. Still wait for the reaction, don't enter aggressively, and look at the daily cycle. But to my opinion, yeah, this is a solid order block. Also, we should have this supply area, but it's not the best supply area in my opinion. It's kind of meh, because it only took some liquidity, you know, it took some liquidity, but it didn't broke any structure. But still, we should have it in mind. But it's not a good supply area in my opinion. And yeah, we should look at the 50% around here, 500. Look for some kind of reaction. Look at the daily cycle. Yeah, this is what I can see at the moment right here. Smaller time frame, there's nothing too much of interesting on the smaller time frames. Yeah, there's nothing too much interesting. Yep. Anybody have any questions maybe about the markup or anything? How do you manage entries that leave the 50% of the OB immediately, and the ones that double, ones like the double M that give you a pullback? I don't understand what you're trying to ask with these questions. How do you manage entries that leave? Not manage. Okay. What do you mean that fair to get involved? Okay, as I said, not okay. We have 10 more minutes. Enough. Okay, so you must understand, if you have order blocks, you will not always have a mitigation on the 50% of every order block. Let's say if you have a 1 hour body candle, let's say you have a 4 hour body candle, and you can refine that 4 hour body candle to the 1 hour body candle. It doesn't mean that the price will come at the 50% of the 1 hour body candle. It can just come and mitigate the 50% of the 4 hour body candle. So yeah, you must be flexible and look around time frames, look to find the best body candle, because the best body candles will mostly have the mitigations at the 50%. The order blocks that are not body candles, like let me find an example, right? Yeah, most are body candles, but yeah, order blocks that are not body candles won't have the best reactions at the 50%. For example, let's see this 3-minute order block right here. It's kind of a body candle, but you know, it's not the best body candle. So yeah, that's why the price reacted at the open. And yeah, I have a rule: if it's under the 15-minute order block, I will enter at the open. If it's not a good 50% body candle, I will enter on the open, like in this example. But if it's a good 50% body candle, even if it's on 1 minute, like where was it? Like right here. Like this one was a good 50% body candle on 1 minute, and that's why I enter on the 50%. So yeah, it really depends. You have to really be flexible and look around time frames. I mean, if you have a valid order block, if it's a valid order block, 99%, okay, I'm talking rubbish now, but 90% of the time, you will see that the price will react at the 50%. Yep. So if it's under 15 minutes, I enter at the open. Exactly. I enter at the open if it's under the 15 minute, if it's not a good body candle. But if it's a good body candle, even if it's on 1 minute, this is the 1 minute entry, but it's a good body candle, and that's why I enter in the 50%. But if it's a not good body candle and it's under 15 minutes, I definitely enter on the open. I hope that helps you, bro. But yeah, it's it's definitely the way I like to enter. I mean, you always must be flexible and look around time frames. I'll try to find you an example right here. Let me see. Like this one. This is a 4-hour order block. Yeah, you see good reaction at a 50%. Let's see another one. This is a kind of body candle, something like that. This one right here, 1 hour, I think it was. No, it was 30 minutes. This one is still a kind of a body candle, but still it was above 50 minutes, and yeah, 15 minutes, and I enter on the 50%. It was 30 minutes, so yeah, I enter here on the 50%. And let me find some more examples like this one. This is a 30 minute. I also enter on this one on the 50%. Let me see another one. There are a lot of good setups. This is a good example. Let me show you guys. So yeah, you'll see that sometimes price leaves this order block and then comes reacted 50%, but then it comes stops out right here. You see? But yeah, you must be careful. As I said, you must look at the wicks. You see, you mitigate this. If you look at this order block like this, okay, you reacted the 50%, but why did it come do this? Why did it come stop you out? Why did it come again? Yeah, you must be flexible and look, guys, look, this was the demand area right here. This is much more valid. See, in the side of the wick was not mitigated on the 50%, you know? And this was the order flow, right? This was the order flow. This is where we made a new leg out, a new push, a new break, whatever. No? So you must really be careful and look at those kind of stuff. Let's see another example. This also a good body candle on the 4-hour. Perfect reaction on the 50% also. Yeah, the 50% body candles are really good. You can just go back in time and test them. This is also a 50% body candle. Perfect reaction on the 50%. You have a nice leg out. You break structure here. You return on the 50% and you continue down. This is a perfect entry also. So yeah, everything under 50 minutes, if it's not a good body candle, I will look to enter at the open. So yeah, but if it's a good body candle, 50% always. Yeah, if you have any more questions, 4 more minutes are left, guys, be sure to ask. Yeah, this was a good Zoom call. It lasted 1 hour, guys. I hope it helps you. I hope you learned something from it. Okay, guys, so if no one has any questions, that will be it for today. I will do more often this kind of Zoom calls, at least once or 2 times a week. We will see, but definitely once a week. And yeah, we will do them on weekends. We will look at the market from last week and same look at the market for next week. as I said, I mostly trade GU, so yeah, you will see me mostly do GU analysis. But yeah, sometimes I trade other pairs, but yeah, last 3 months was pretty much GU. I had like maybe one trade on AU, I think, but yeah, it's mostly GU at the moment, because the price delivery since I think, yeah, since this order block here, yeah, was perfect on GU. Since this order block here was mitigated, see fake OB, nice break, nice leg out. Since that order block was mitigated, I really started trading GU really hard, because I really like the price delivery on it. As you can see, it's really good. GBP USD to me is much better than EU. I mean, it's all preference. Somebody likes EU, somebody likes GU, but yeah, to me GU moves a bit better than EU. But pretty much they move the same. They're in correlation. If you look at the let's do this example. If you look at the daily here and you go, where's this compare? Where's that? One sec. How do I compare the? Yeah, if you look at the GU and EU, you can see pretty much they're kind of correlated. Let me show you one sec. Yeah, you can see GU, this order block right here, and yeah, you can see this order block right here. And look at EU now. Yeah, you can see pretty much this order block right here, and you can see this order block right here. So yeah, they're pretty correlated. And yeah, you should look at the timing. Also, if we look at the USD CAD, one sec, what can we see? We can see a perfect bullish order flow, less than 1 minute left. So yeah, USD CAD, be sure to time your entries with USD. Why? Because I think we can have a nice pullback on USD before we continue to the upside, in my opinion. So yeah, be sure to time your entries with the DXY and USD pairs. So yeah, especially if you're looking at these higher time frame continuations or reversals. So yeah, look at the USD pairs always. That's pretty much it for this week, guys. Yeah, thank you for joining in. And see you next time.